Hello and welcome to the eFresh.com Coffee News. My name is Mylène and these are this week's headlines. Brazil's coffee hampered by lower prices. Rwanda predicts shortfall in coffee production. Starbucks 3Q profit beats estimates. Mexico simplifies coffee trade process. First chain coffee factory in Africa. Lower domestic and international prices dampens Brazil physical and futures coffee trade last week, according to coffee industry specialists. Most active ICE futures US September coffee futures closed down 230 points, while December coffee closed down 225 points. Although roasters have been showing interest in buying, coffee producers are looking for higher prices at around $140 per bag upwards. Unless they really need to sell, they can't be tempted at current prices, said Ayrton Neves, a trader at Sun Cafe in southern Minas Gerais state, the #1 coffee growing region. Traders also said that Brazilian coffee trade should pick up in August onward when the vacation period finishes in Brazil and international markets. Coffee projections from Rwanda Coffee Authority are likely not to be met because of limited coffee trees and an irregular growing cycle. Compared to the projection and according to the trend in the production cycle, it will be slightly below the target, said Pontien Munyonkera, the head of planning at Osir Cafe. Munyonkera said that the coffee body projected 23,000 tons of total coffee production, including 5,000 tons of fully washed coffee this year, but 8,300 tons of coffee have been registered in the first half. Munyonkera said they are targeting 18,000 tons by the end of September. About 4,900 tons have been exported, earning revenue worth $10 million, and other 3,000 are in the warehouses waiting to be exported. Starbucks says cutting costs helped it post a fiscal third quarter profit better than Wall Street analysts expected, despite lower sales and slower customer traffic. The Seattle-based gourmet coffee chain earned $151.5 million or 20 cents per share, compared with a loss of $6.7 million or 1 cent per share a year ago. Excluding costs for closing underperforming stores and other special items, Starbucks said on it earned 24 cents per share compared to 60 cents per share a year earlier. Analysts expected profit of 90 cents per share, excluding special items. Same-store sales dropped 6% in the US and 5% worldwide. The chain has struggled to keep sales up during the recession. Mexico has simplified coffee trade process in a bid to boost imports from Colombia, the economy ministry said last week. Exports have increased in recent years, and most Mexican coffee is the Arabica variety, so much so that domestic production of Robusta has proved insufficient, the ministry said. Although Arabica is usually of better quality than Robusta, there is a greater demand for the latter variety. The new rules allow Colombian exporters to obtain their permits on the internet by typing in their own data, a process that had previously needed a visit with notarized document to a representative of the Mexican Economy Secretary. Although the measure is adopted under a three-way trade treaty between Colombia, Venezuela and Mexico, the new measures only apply to Colombia. The first factory that processes coffee to its final product in Africa for export to Europe was officially opened by President Yoweri Museveni. The Good African Coffee Factory at Bugolobi is the first coffee roasting and packaging factory in the whole of Africa to export coffee to supermarkets in the UK. The $1 million factory is located on 5th Street in Kampala's industrial area. It has a capacity of producing 3 million kilograms annually. The project fits into the government's value addition strategy and is a bold move to penetrate Western markets with processed African products. By having the whole chain of value addition done in Uganda, the company saves 45% of the entire cost of transporting green coffee beans to Dublin, island and having it roasted and packaged there. Thank you for watching the efresh.com coffee news. See you next time.